All right, let's begin. My name is Allison Rendelman, and I'm team lead of the Customer Success Associates here at YCharts. My co-host for our webinar today is my friend and colleague, Rushi Shah of the product team. Today, we're walking through YCharts Economic Summary Deck for the second quarter of 2020. We put this PowerPoint together every quarter and share it with our clients so that you have top-notch resources to use when communicating with your own clients and prospects. We know advisors are getting significantly more client questions these days, so we're going to break down the data and trends on each slide, give some recommendations on how you can explain those trends to your clients, and show you where you can find that data in YCharts. Please, if you have any questions during the webinar, you can submit them on the left-hand side of your screen. And Ruchi and I are happy to follow up with information you're looking for. I want to note that the content of this webinar is meant for educational purposes only and is not intended to be used as investment advice, nor is YCharts acting as an advising party regarding client funds in any way. Finally, we'll post a recording of this webinar to the Support Topics page of YCharts, and a copy will be sent to all attendees. Now I'm going to hand it over to Rushi to get us started.
All right, thanks, Allison, and good afternoon, everyone. When I last did this Econ summary deck with Connor back in Q1, I thought, maybe we'd be back in the office while covering this one, but we are still at home, so happy to be with all of you and glad to cover Q2. Today we're going to review this Econ summary deck, and I want to jump into YCharts first just to show you where you can find these slides. So when I jump into the dashboard, you can hover over Support and click on Support Topics. And then under Resources, you can click on Presentation Materials. This is where you can find all of our historical Econ summary decks. And we started creating these back in Q2 of 2019, so we're on our fifth one, and it's been a great success. So we're going to continue building these out for our clients and our advisors that love using these for their client communication efforts. Once you click on that download link, you can download the PowerPoint. I already have it open here, so I'm just going to go ahead and jump in. So just a little more information on this deck. We create this by going through and putting a lot of time into looking at some of the quarterly topics and some of the tools and information that you're able to find on YCharts. We wanted to make sure to bring those into slide format so you can tell this story effectively when you're meeting with your clients. These slide decks are built within Microsoft PowerPoint, and you can definitely take these slides, change the colors, brand them, and even add your own commentary within the slides to basically make them unique towards your client communication process. We can also white label them if you are a YCharts professional user. So if you want to reach out to your support contact, they can help you with that. The slide deck is formatted the same way every time, and we'll run through the slides where you have your first portion, and those are slides you're probably familiar with because we just update them quarterly. And then the second half is more so just some ad hoc slides that we thought would be useful to cover based on what happened in Q2. So with that, I'm going to turn it over to Allison to get things started.
Thanks, Rushi. So if you take us into the first slide of the deck, you see, for many of you who might be familiar with the deck, this page, at least in its formatting, is very familiar. However, compared to the story that Rushi and Connor were telling last quarter, the story now is a lot different. So with that in mind, in Q1, you have to imagine the coronavirus came into play, the lockdowns occurred, and our markets and general economy really sank. So what we saw in Q1 of this year was some of the worst performance of the S&P and these other major market industries to date. However, the second quarter of 2020 really rebounded, and the market was able to recover from those very low lows. The S&P is up about 20%, and even though we have the coronavirus and the lockdowns and restrictions still raging on, what this slide shows and really highlights is the decoupling that markets can do when they break correlation with the broader economy. And what we're seeing here is after the market took a steep cliff dive in Q1, we really managed to rally in the second quarter. And I think we'll see just exactly what that means as we break down and look at other sectors and industries on the coming slides. So Rushi, if you could move on to the next slide, the market performance has brought on some interesting storylines within sectors. Can you tell us about the U.S. sector performance?
Yeah, it's definitely been interesting, Allison. So you saw the NASDAQ composite in the last slide really take off in Q2 and outperform other market indices like the S&P 500 and the Dow Jones Industrial Average. So you're seeing that within some of the sectors here. For example, tech grew over 30% in Q2. But surprisingly, it was the energy sector that outperformed the rest, coming in at 31.91%. As you can see, all 11 sector ETFs here were positive in Q2, which was the complete opposite of what happened last quarter. So it's been quite a change in the storyline this quarter. I do want to spend some time going into YCharts and showing you how you can quickly find this visual or this data and see it for yourself. So if you haven't already, and I'm going to jump back into YCharts, I would highly recommend checking out our templates throughout the site. So we built out this templates menu throughout different tools so that you're able to find the most common workflows that our users enjoy running through. So when I jump in the fundamental chart here, I can click in the upper left where it says New Fundamental Chart and click on New from Template. So you'll see that we have a ton of different types of charts that you can click through, and they're already built out for you, and then you can change them based on what you're really looking for. So in this major asset class charts section, I'm going to scroll down towards the bottom here and click on Sector ETF Performance. Now you can see this has all of the sectors or the sector ETFs so that you can view that performance, and it looks like it's over a 3-year time frame. So maybe we want to look at year to date here, and maybe we want to just focus on a few sectors like energy and technology. So you could just go ahead and uncheck the rest of them just to clean up the chart a little bit. Now, a few other things you could do here is, let's say this is the chart you want to show, and you want to click on Presentation View. That'll turn this chart into what it'll look like if you were to export it. There's a couple other really cool things and functionality that we've added lately. So you can add a title on the slide, you can add some notes, and change the chart size so it fits in maybe your blog post or your PowerPoint slides with the right type of size. You can also reach out to your support contact and add some custom colors. So if I click on Show Custom Colors, it'll throw on your firm's branded colors, and also we could throw in your logo here in the bottom left. So there's a lot here you can do to really customize how it looks and feels, and I'm sure if you follow some major influencers on social media and some of their blog posts, we've already done this for them, and it's a great look on their blog post. So something I would definitely check out if you're into that type of client communication.
Rushi, if I may, I think this is a really great demonstration. I love that you show, starting from a chart that we saw in just the Econ summary deck, you're able to hop into YCharts and actually make that something a little more live time as it's connected with our site. And then you're also able to transform, as you have your account customized to your firm and yourself, you're able to transform that chart into something much more personable with your special colors and logos there. And I think that really goes a long way when you communicate that onto your clients, that they feel like they're receiving something, built and powered by you and your firm. I think that's a really cool thing to show.
Yeah, definitely. And I think another thing that you just mentioned there that's important to note is the timeliness of the data, right? So, for example, our Q2 Econ deck is giving you a summary of what happened in Q2, but let's say one of your clients wants an update of what happened in the month of July or what's happening right now. This is a great place to get that most up-to-date data, and you can pick your custom time frame up here. So it's a great way to jump back and forth between the Econ summary deck and the tool itself. I'm going to go ahead and jump back into the slides, and to help break down each security asset class, Allison's going to go over 2 asset class performance grids that we include on these slides as well.
That's right. Thank you, Ruji. So slides 4 and 5 have 2 separate color-coordinated grids here that just show you the various asset class performances and how they did relative to each other. This first one has our year-to-date return, which keep in mind will be for the end of Q2 like Rushi said. What I'll re-articulate from the slide notes actually on this page is that the volatile markets of 2020 seem to be benefiting assets on the far ends of the risk spectrum, more so than those considered more moderate. If you move on to slide 5, that quarterly graph, what I like here is you're really seeing a timeline. So you're seeing this asset class performance over each quarter going back to 2017. I just think this grid in and of itself is a great example of why the strength of diversifying your portfolio is so important. Because you can see over different time periods, what we see is the strongest now is, of course, the U.S. growth for this current quarter, but that's certainly not the case back in the end of 2018. And it just shows you that it's really hard to predict markets and the power of diversification. I think this is good visual, especially for clients who might not fully understand the strengths of diversifying your portfolio.
Allison, so, I think this is a pretty valuable visualization. Is there anywhere that we can see this data on YCharts, or at least the grouping of this data itself?
Yeah, that's a great question, Rushi. And I'm actually really happy to introduce, we've just added a new template like you were referring to earlier. We have a new template on the comp tables tool. So if you could actually jump back into YCharts and take us there, you're just going to go up to tools and then comp tables. For those of you not familiar, comp tables is just a really strong way to visualize data in just a simple table format. So you're able to enter your securities at the top and then any metrics, and it's just going to bring in the most current data. But like Rushi's hovering over the new comp table unsaved, if he clicks on that, you're going to open these new from templates that Rushi was talking about. So we've already built out many templates that we think are a great starting off point, including, if you scroll down a little bit, the major asset class index performance is one we just recently added. And what this covers are the 11 asset classes we had on that grid view you were seeing earlier, and their respective indices that we've chosen to represent those asset classes. And then if you move on to the right here, you're seeing all these metrics, the month-to-date total returns, quarter-to-date, 3-month total returns, and so on. Now, I think just like the example Rushi showed earlier with the chart, the power here is that you're getting live data, interactive data here. So we see at the very end of these metric column names, it says in parentheses daily, and that means that the frequency this data is produced is on a daily frequency. So even though this deck is static, something that was produced at the end of Q2, if I want to have an informed conversation, or even I'm interested in my own research further into how these asset classes are performing today, I can look at this first column of month-to-date total returns, and I'm able to see the changes. If you just click on that once, Rushi, that's going to sort it. Click on it again so we can see the top to bottom. And what's interesting here is, our Russell 200 top return is actually the leader of the pack. When I was doing research on this before, a couple days ago, actually the MSCI World X USA total return was doing the best. So, you're seeing how variable each of these asset classes can be when you check on that data day to day. And what's nice is you can just jump into comp tables, and just with a few clicks of the button, we were able to basically recreate that information we're seeing on the Econ deck, but in YCharts. So moving on from some of the asset classes here, our next slide, I think, Rushi, the Fed has been pretty active this year to try and keep the economy stable. What can you tell us about the Federal Reserve easing activity?
Yeah, Alison, this is definitely one of my favorite slides in the Econ deck because of how succinctly it tells the story of what's been going on. So the Fed has been pretty active in all this time to keep the economy stable, and it's been interesting to see some of the data points here. Going left to right here, you could see the first chart is just talking about buying assets in the open market, right? So you can see some of the things like the total assets held by Federal Reserve banks, Treasury securities, and mortgage-backed securities all increasing to record highs in the last year. Also, towards the middle, you could see that the Fed has kind of returned back to that low rate environment that we saw back in 2009. So all that work that Jay Powell did starting in 2016 of all the rate rises has basically reversed and reverted back to having these low rates. So that's pretty interesting to see what's going to happen from here. And then lastly, the decreasing reserve requirements, right? So you're seeing a big spike in the excess reserves of depository institutions, and then the required reserves are essentially down to zero. So that's not a typo. That's actually where that data point has gone. So really interesting times right now and what's going on. And also, this is a good time to kind of talk about our last webinar. So if you did want more content related to our economic data and the Federal Reserve in general and what they've been doing, I'd highly recommend checking out our last webinar. It was actually called When Will the Economy Recover? 5 Leading Indicators You Should Be Watching. So I'm just going to quickly show you how to find that here on the tool. So if you go back into YCharts and you hover over support topics, back into resources, you can click on webinars here and view all of our historic webinars. So there's a lot of useful information here, even if you're someone new getting started with YCharts and just learning how to use some of the tools, or if you want to dive into some of our pretty research or content heavy ones that we've done recently, they're all right here. And then jumping back into the econ slides, I'm going to go to the next slide, which is all about housing. So housing's been really interesting, and for me personally, being in Chicago, hearing about a lot of people here either refinancing because mortgage rates are so low, or even just thinking about moving to the suburbs because might not make sense living in the city of Chicago if you're not able to go out and enjoy the city and you're living in a confined space, whereas you can move to the suburbs and have a lot of space. So that's been a really interesting thing that I've noticed recently. And these charts tell that story, right? So right here on the left, we have mortgage rates and origination. So you're seeing that 30-year mortgage rate is just over 3%. And it's at record lows. So it's kind of a no-brainer for a lot of people to refinance their mortgages. And also you're seeing that in the overall just new mortgages and also refinances that are occurring. So you're seeing that spike in the beginning of 2020 here. And then on the right, you're seeing just the sentiment overall of housing, right? So you're seeing prospective buyers, you're seeing just overall single-family homes. All of them are kind of coming back from what occurred back in March. So that's really interesting to see in housing, which is very different than what happened back in '09 with the housing crisis and the housing bubble of just people owning 2 or 3 homes and not being able to cover those mortgages. It's a little different this time around, which has been interesting. And down at the bottom here, we have an indicator review of just some of the important housing indicators that we cover on YCharts. So that's a useful graphic just to see what's been going on lately with these indicators. So Alison, what can we learn about interest rates?
Yeah, so what we see here on this slide is a graphic for various rates and their changes from last quarter and the quarters before. And on the right side is our YCharts Excel template of the yield curve, which you can actually find in our Excel template library. On this slide in particular, not much has changed here from the first quarter of the year, and that's something we'd expect as interest rates are a lot slower moving and a more macro kind of reflection of the economy. I do want to touch on your comment of the Fed Rushi. I believe it was Jerome Powell at his last press conference who emphasized that the Fed has lending powers, not spending powers. And I think this relates directly to the slide of interest rates. As you can see, the curve of rates from a year ago, on that right side, you see the blue line at the top there. Those were interest rates from last year. However, the yield curve has lowered dramatically to this depressed level of the interest rates now. If you see the effective federal funds rate on the very bottom of that left side grid, it hasn't changed from last quarter. Basically, the Fed is going to do their best to make financing during these times as cheap as possible and keeping those interest rates compressed, as that's the best way that they can use their power to facilitate borrowing and spending to hopefully help generate more demand in this economy. So, Rushi, moving on from this slide, can you tell us how the dollar has been in relation to other currencies?
Yeah, definitely, Allison. So you can see the heightened interest in commodities like gold and silver because of what the dollar has been doing, which has been pretty interesting in the markets recently. As you can see across the board with different currencies, the dollar has been weakening slightly overall. So you can also see the energy imports have really fallen. So right here in the total imports, over here on the right, you could see that year over year, it's the OPEC imports are down over 53%. So that's pretty interesting to see as well. You could see that these bottom charts are all possible using the fundamental charting tool, and you can actually annotate the chart using an average line. So you can add that into the chart, and it helps visualizing where the current situation is compared to the average historically, and that's a nice little touch you can add to your charting tool. So now that we've learned a little bit about the dollar, Allison, what do our next two slides tell us about the upcoming expectations?
That's right, Rushi. So our first slide here is the leading indicator summary and trend slide. And what we have here are some of the more popular leading indicators people like to look at. Something that's especially important now given we're in such a turbulent time in the market where we've entered a recession, but the market rallies, but recently it's been going down again. So these leading indicators are getting special attention. What's interesting and what I'll highlight here is some of the information you see like in the past quarter, how the Philly Fed Manufacturing Activity Index has done well. The S&P has, that 20% return we talked about earlier. But you can just compare those leading indicators and their times in a previous recession, the 2008 recession. You see the indicators that were hit hardest around then was the S&P and the Philly Fed Manufacturing Index. Something that has still been steady and is a little more optimistic view are the U.S. housing starts and U.S. building permits. I mean, definitely during lockdowns and restrictions with so much uncertainty, people weren't making a lot of plans about housing, either starting or moving or building. But I think now as the restrictions and lockdowns have become more normalized, people are more willing to make some of those longer term commitments when it comes to housing. And that just helps generate demand in the economy. Moving on to our next slide, and this is the last slide of the regular slides that we just update quarter to quarter. And then following from this, we'll engage in a little more discussion about some of these topical trends we're seeing. But this one just highlights the employment situation. As you can see, we've captured both the unemployment rates for the U3, or just the U.S. unemployment rate, and the U6, which also takes into account people who are underemployed. So those working part-time jobs, many members of the gig economy are considered part-time workers, so they would like to be working more full-time jobs, but can't due to economic reasons. Below that, we also have the U.S. initial claims for unemployment insurance. And this is a data point that has been monitored really closely because right at the height of COVID and when everything was locked down, unemployment insurance claims spiked at levels unprecedented, never before seen. So we can see, right in that recessionary gray period that we've included at the right end of the chart here, we're seeing that those initial claims for unemployment have jumped back down from their highs of about 6.86 million down to 1.3 million. But keep in mind, this is still initial claims for unemployment insurance. So that most recent data point, there's still 1.3 million people at the end of Q2 who were filing for unemployment insurance. Rushi, I'm curious to know, as we cover the slide and a few more topics after this one, what are your thoughts on the general outlooks for employment right now?
Yeah, it's definitely a scary time right now, and we've heard of people, or maybe you're on LinkedIn and you see people post about getting laid off, and it's sad. And I'm personally hoping for that type of V-shaped recovery that a lot of people are talking about. I think as people start going back out and start going back to malls and restaurants and things like that, we'll see a lot of those jobs come back. I think the big question is how many jobs are permanently gone versus ones that are just temporarily gone, and those people will be able to get right back into the workforce. So I think it's going to be interesting, but obviously hoping for one of the better scenarios, which is that unemployment rate of 11.1% gets back down close to where it was before all of this. So I think it'll be interesting to see what happens in the back half of the year.
Yeah, definitely. And Rushi, as we know, employment is tied closely to consumer because as more people have jobs, more people have discretionary income to spend. Can you tell us what's going on in consumerism?
Yeah, definitely. And it's funny, this chart, like a lot of the other ones, almost look broken because of the crazy movements that have happened this year so far, but they're not. This is the real data. So on the left, we have the U.S. retail sales number, and you're seeing that huge spike up in the overall like Q2, but in Q1, you could see the spike down. So it's been really interesting what's happened in the last few quarters. And then on the right, you're seeing just the overall consumer sentiment and personal savings rate. And I think that's, obviously a good thing that people are saving more and they're preparing for a worst case scenario. But I think that does also kind of make it scary for the retail sector. Are people going to save more and spend less like they have definitely done so in the last few months, or are people going to go back to spending money at restaurants and at stores? So I think that's going to be interesting to see. Something else, just overall U.S. index of consumer sentiment. So you're seeing that number get back down to where it was back in March. So that's kind of a disconnect between that and the markets. The markets continue to go higher while consumer sentiment isn't really there. So we'll see what happens there as well. So I think this next slide exemplifies for us the diversity of returns for those consumer markets that we just covered.
Yeah, that's right, Rushi. At the height of COVID and the lockdown, we see from this chart a spike in sales of only two things, and that's grocery stores and the food and beverage store sales. So it makes sense, people weren't able to do pretty much any spending activities outside of the home. And there was a big rush, if you remember, trying to grocery shop right at the beginning weeks there, and how many shelves were empty. It was a really bizarre feeling. But in the second quarter, we've seen a return to some of the kind of pre-levels to COVID. You can actually see, you talk about V-shaped recovery. Well, at least in this very micro scale, Rushi, we can see this kind of V jump for a lot of these other spending industries. So, department store, auto, electronics, and retail sales, those have all recovered somewhat from their previous levels, but I'll note that, department stores and electronics appliances, which are our bottom two numbers there, are still definitely strongly in the negative from their previous levels. And I think as we see, various industries are able to recover based upon outside factors, and that's, how much of this industry depends on person-to-person contact, how much of this involves long-term financial decisions, and we're just seeing that spread happen with the different industries here, and I think that's a really interesting story to tell. So Rushi, we already went over how the Fed is doing, but how about the federal government?
Yeah, definitely. So it's almost been a full court press from the Fed and the government right now to keep our economy stable. And I think a lot of people are questioning their moves or their actions, but you know what? It has been keeping the overall economy somewhat stable during this time. So, overall the goal has been to keep things normal while COVID passes. The question is, has all their ammo been taken in the last 6 months or so? And is there anything left if there's a second wave or if there's continued lockdowns going into 2021? So you're seeing on this chart, you have overall U.S. public debt and how that's continued to increase. The middle section is really interesting, where it's going to show the 1-year growth expectations of debt, right? So we're seeing a huge spike in what people think the debt's going to be at a year from now. And then lastly, kind of a big number that we've surpassed, just overall U.S. monthly Treasury outlays are above 1 trillion now. So that's something to keep an eye on, and hopefully something the government is able to kind of stabilize and keep on their minds. Maybe our last slide, Allison, can put us into some perspective on this.
Yeah, that's right, Rushi. So, the title of this presentation that we have today is Breaking Down Our Q2 Econ Deck, Can the Market Rally Continue? And what I like about this last slide is it really puts it all into perspective. What we have here is just the S&P as representation of the market and the U.S. monthly GDP. And when we're talking about recoveries and what that looks like, I mean, certainly the market in recent time has taken a V-shaped kind of recovery. I mean, it dipped down below, and like you said, the chart almost looks broken in the sense of how quickly those lines drop right in the very beginning of 2020 in that gray zone. The real question is, as the market levels continue to rebound and they kind of swing up and down, how is our U.S. monthly GDP going to fall, and how is the broader economy? So I think we've shown that there is a divergence in various sectors and industries on these slides. We've seen that with the spending spreads. We've seen that with some of the leading indicators. Some of them indicate more positive things to come. Others tell a much more dismal story. We've seen that even comparing this slide deck to the one you and Connor presented on at the end of Q1, which had a much more negative story to tell. It'll be really interesting to see in the coming quarters and the coming months how our market continues to do and how the broader economy does. I mean, this is what it's all about. COVID has changed our economy and the way it functions forever, and YCharts has that data to carry us along the way.
All right, thanks Allison for covering that last slide. I hope all of you enjoyed getting an overview of the Econ summary deck. Like we said at the beginning, we take pride in creating this deck for you so that you're armed with some visual data and some things that you can use in your client communication. So please reach out to your support contact if you have any questions regarding this deck. If you wanted any edits made or anything like that, we are here to help you, so please feel free to reach out.
Thank you, Rushi, for leading us out, and thank you everyone who attended today's webinar. I want to reiterate that a recording of this webinar will be sent to all attendees and posted on YCharts in case you want to review anything we went over or to share it with your colleagues. For any questions you might have submitted during the presentation, we'll be reaching out soon with the information you're looking for. We hope you found our demonstration insightful and that it might lead to informed conversations with your clients. We always appreciate any feedback you might have for us. If you have any questions regarding what we covered today or want to learn more, please feel free to reach out. Thanks again.